Friday, December 12th.
Woohoo! Yes.
My friend, how are you?
It's great. It's a great day. I'm setting up a Christmas tree later today.
Well, there is, speaking of
Haven't
Christmas
done it
trees, we
yet.
got two guests with us as a early Christmas gift. Going to talk
Mhm.
about their Christmas gift to the commercial cleaning industry. We got John Gallagher and Jeff Schubert with Dimension Funding. Gentlemen, how are you this morning?
Doing great. Happy holidays, everyone.
Yeah, terrific. Ditto.
John, if you wouldn't mind, this is your second time on the show, so you're a repeat customer. So thank you for coming back on the show. But I think there's a topic we want to hit. But before we hit into the topic, could you give us a 30,000 foot overview of who you are? Let you do that the same, but also Dimension Funding, kind of what you do, claim to fame, all that good stuff with that Christmas tree behind you.
Yeah, sure. Okay. My name is John Gallagher. I'm the Vice President of Sales at Dimension Funding. I've actually been with the company. February will be 28 years. So I've been with them since 1998. And it's been a great experience. I've been here through the terms of 5 presidents, and for some reason, they won't get rid of me, which has worked in my favor. But what our company does is we do equipment and software financing, and we also provide working capital. And one of the things I love about what I do is we're able to loan businesses money that essentially helps them grow. I kind of feel like what our company does is we help grow America. When companies need funding for equipment, we can provide that. The process is easy. The pricing is competitive, and we make the process very, very simple for the end user and for the people selling the equipment. And that's kind of our value proposition. I mean, we all get our money from the same places. We all can work as fast as everyone else, but we're going to treat the customers right, and we're going to make it easy on them.
Love it, love it, love it. Jeff, what about you? What's your role there?
Yes, I'm the Director of Working Capital for Dimension Funding, and unlike John, I've only been here about 10 months, but I've been in the equipment financing industry for over 35 years, helped start my own leasing company for 10 years as well. And I've been doing working capital, specializing in that product for 9 years. So I'm passionate about helping small businesses and mid-sized businesses grow their companies. And one of those factors, in addition to equipment financing, is getting the capital you need to grow and scale your company.
Cool. We're going to break this down. We got 25 minutes or so, but we're going to break it down twofold. IRS 179, I want to start off with that, and we'll end with working capital. So, John, let's start off with that. The IRS 179, again, we were talking pre-show that probably we need to have this call a little more advanced in the future, meaning, sometime in the early fall to have this conversation. But give the audience, the listeners, a review of 179, IRS 179, and kind of the pros and cons, if there's any cons to it.
All right. Thanks, Jack. All right, audience, don't fall asleep. This is not going to be a big thing on the IRS. No, the reason why we wanted to talk about this is the IRS does have an excellent tax deduction that small and large businesses can use that can help decrease your taxable income. So what it is, it's called IRS 179, and you are able to deduct up to $2.5 million in equipment costs. And that's actually up from 1.2 million in 2024. And this deduction is good on new and used equipment, as well as off-the-shelf software, or even I think customized software can be included as well. And the 2025 spending cap is $4 million. So that's the maximum amount that can be spent on equipment before the deduction gets reduced on a dollar for dollar basis. And there's also, you can take 100% bonus depreciation, and that's generally taken after the IRS, 179 spending cap is reached. But ultimately, you want to talk to your CPA about that. But so what I wanted to, just kind of break it down, like, how does it work? So when a regular business buys a piece of equipment, usually you would write it off over time through a normal depreciation schedule. So like, if it was say like a $50,000 piece of equipment under the normal depreciation schedule, you'd probably write that off over 5 years and take $10,000 per year. So with Section 179, you are allowed to take the full cost of the equipment, in the year of purchase, instead of waiting, and depreciating it down the road. So for example, with that $50,000 example, instead of depreciating it over 5 years, you could actually deduct the entire 50,000 in year one. So
well, if
and
I'm a
again,
contract cleaner, John, and I'm looking at a tax bill of $50,000 for this next year, or at least estimated, I could before 12/31 go out and buy $50,000 worth of equipment, and basically wipe that $50,000 out of the IRS
Yes.
payment. Is that's the way it looks?
yes, essentially you are able to, if you purchase that equipment, before year end, you could write off the entire amount. So you could take that $50,000 as a deduction, which will decrease your taxable income.
Gary, how many times did you pull the trigger with that within your company when you?
In the good years, a lot. So whether it was a vehicle for executive use or vehicles for we had route cleaning, so we had 12, 15 vehicles at a time. It was great to be able to, at the end of the year, pick up scrubbers we had to phase out old scrubbers and bring in new scrubbers. So yeah, quite a bit. We did that often. I found myself in a position where pretty much every year, somewhere around the mid to end of November, the CPA would say, "Okay, you got to spend this by the end of the year. We're going to send it to the government." It was Christmas, man. It was great. So, listen, I would encourage anybody. These guys are the pros at it, but don't. The government, you got to pay the government what the government's due. But if it can benefit your company, do that first, and then and go from there. So it's a great opportunity.
Yeah,
What if I?
that's kind of the way I look at it.
Yeah, go ahead, John. Go ahead.
Oh, I'm sorry. I was just going to say, I feel like what Jerry's saying, it's kind of a win-win for everybody. They can get the equipment and decrease their taxable income. Is there a downside to this?
Well, let's ask this. Let's play hypothetical. Crap. My $50,000, I'm going to have to figure out how to pay that by the time it's due, but I don't have $50,000 to go buy that $50,000 of equipment. So what's the game plan then? Is that where you guys come in, John?
That is, I'm glad you threw that to me. Yes, that is where Dimension Funding can help. The great thing is not only can we get this approved and funded within a few days, we do 100% financing. So you don't have to come out of pocket for the $50,000 for the equipment, for the depreciation. You can hang on to your cash. We will buy the equipment. We'll pay the vendor. You can take that IRS 179 write-off and then start making your payments in January.
Wow. Okay. Jerry, did you finance or you were probably a cash out of hand kind of guy, weren't you? You were making so much money.
The early years, I would, if I needed, maybe not necessarily equipment, I could swing that if I had to have vehicles or something. Yeah. But in the later years, I was able to, I had the cash on hand to be able to do it. So that's the downside to have good. I mean, it's a downside and a bad side, but, pay the government what you got to pay them and utilize this as a huge write-off. It's a great thing. It's a great tool. So,
John, what does that process look like? So, like we've got 3 weeks till the end of the year. You need to be having some kind of conversation with your CPA to kind of say, what does that tax burden look like for the next year? I know one of the contractors I was working with, he had to avoid a call because he was at the dealership buying 7 new vehicles because he had to take advantage of this thing. But what's the time frame? I know we're very much against the window now, but your first thing is have your CPA give you some kind of indication of what you got to do tax wise, liability wise, and then if there is a huge number there and there is a gap within some equipment that you need to buy, is it just reaching out to you and Jeff and starting the process?
Yeah, it's that simple. So if anyone is looking to purchase equipment and wants to finance it, they can reach out to me either myself or someone on my team will collect all the necessary materials. And the great thing is we don't need a lot. It's going to be a credit application and 3 months bank statements, copy the equipment quote. We usually will have this approved within 24 hours. All of our documents go out via DocuSign. So no one has to FedEx anything. And, typically we could, if we got an application, today's Friday, if we got an application on Monday, we could have this approved by Tuesday, send documents out, have a purchase order sent out to the company that's selling the equipment same day on Tuesday. That company could be funded by Thursday.
Okay.
I mean, so realistically, with 72 hours from the receipt of application, the vendor can have money in the pocket and that equipment can be on its way to these cleaning companies so that they can take that deduction.
That's a big deal. That's a really good, the process is great because I think there's a lot of people who even with this being, mid-December, we're definitely pushed it out because there's some, I know Jack and I both work with companies that, need to take advantage of this. So yeah, it's good to hear the process and how quickly it goes. Cause I think sometimes, people who are kind of doing everything in their business, when they think about like, I just don't have time to do that. And so thanks for that information, John. I think that's healthy. So,
of course, the other thing I was going to say is we're going to make it real easy on the end user. I mean, we can take an application over the phone. If someone doesn't, and we also have some electronic applications where they can fill it out. I mean, our whole model is designed around making it easy for everyone because, anyone who's bought a house or, filled out any type of loan paperwork, it's miserable. And we want to be the opposite of that. We want it to be a situation where, it's a quick process. And what I always tell everyone is once you fill out an application with Dimension Funding, you will never have to fill out another one again. So if you want to finance something else, you don't have to go through that whole process. It's just updated bank statements and the equipment quote.
Yeah. And I think this is what the moral of the conversation here is. Not really about Dimension. I think what you guys bring is great, but from Jerry and I's perspective, we see you guys at Dimension Funding as a tool, as a resource, to make that your company better. And I think the part of the conversation is every contract cleaner that's listening to this, there's probably a piece of equipment or 2 or 3 or 4 that can make those accounts that you're servicing a lot more profit. And again, nothing against the government, nothing about negative about paying taxes, but if that $50,000 machine or that $20,000 machine or that $100,000 machine could make you that much more profit within an account, where is that money better invested? And I think that's where, John, Jeff, why we want to get you guys on the show, because that's realization is that money's got to work somewhere. It's going to either work for the government or it's going to work for your company. So what's that better hits? So I love it. We'll have John's contact information as well as Jeff's contact information in the show notes. Now that said, Jerry, before we went on the show, what was the quote you said about working capital? What was the quote you had?
So to scale your business, you typically have to have 3 things: the trust of your leadership, you have to have organizational strength, like a good foundation, and capital to scale with. And basically, it's money to invest in your business. And so I think those are the 3 main things. And I think that's where, John and Jeff, probably more so Jeff, comes into the picture on helping you grow your business. And I think a lot of people are afraid of that. But what they don't realize is if they're profitable and they have money coming in and they just need to be able to get from $5,000 a month to $50,000 a month or whatever that might be, you got to be able to carry your business for 60, 90 days when you make that kind of a transition. So it's always good to have some kind of capital in place. So maybe Jeff can jump in on and help us with that and see what that looks like.
Jeff, play the scenario. So here's the scenario. I'm a contract cleaner. Let's just say I'm a $250,000 or I'm a $500,000 contract cleaner. I'm looking to shift gears to that next level. I've got a golden opportunity. We're experiencing this through the exchange with Route, but I've got a golden opportunity that this account that I'm about to pick up is $25,000 in billables a month. I'm a $500,000 company. I don't have a lot of cash in the bank. I know that the client's going to pay probably within 45 to 60 days. I don't have 60 days at $25,000 that $50,000 sitting around to kind of pay my employees, get the necessary equipment, which ties to John's conversation. I don't have that capital to kind of get this account off. So they want to give it to me. I don't have the working capital. What do I do?
Good question. So to get back to what John was saying, it's, some people call working capital growth capital because that's really the only reason why a smaller mid-sized company would take out a loan, right? So you got a specific, especially in this scenario, you have a specific contract. You know what the costs are going to be. You'll know when you're starting to get paid back on that. So it's a ROI decision more than anything else. So if you need $50,000 to go out and get some new supplies, above and beyond hard assets like what John's doing or software, you need, you have to pay the folks right up front. You may want to hire, need to hire some additional, employees, obviously. You might want to do some more advertising after that's done, right? Whether it's a marketing campaign or whatever that that's something that you're going to want to be able to get a good ROI on as well. So I'll think, and there's also there's other reasons. You could have some slow accounts receivable where your customers are not paying you. So you may have $30,000 stuck in AR that you can't get your hands on, and you need that to grow and take advantage of that new contract. Working capital is a great solution there because we could front load you and then you could pay that back 3 or 4 months later when your cash flow comes through. So it's a way to manage your cash flow, and or if you're seasonal for some reason. I don't think that's so much of an issue with janitorial services, but that's another reason. So
I would encourage, Jeff, you make a good point. If you're going to do something along these lines, well, let me ask it this way, because I don't want to put anything on your business that's not true, but I always found that, like with my bank, I had a line of credit, for $1 million. I pulled it because basically a lot of customers, they want you to be their bank for 60 days, 70 days, which, it's kind of dealing with the devil. If you want that business, that's the way it works. So your organization could really be structured in a way to kind of be a line of credit for a company, which you guys might benefit them better than a local bank or national bank that may not be willing to take that kind of a risk. So I think that's a great point you make, Jeff, is make sure that, you don't, if you're in business, you don't want to get strapped with a ton of debt, but if you got to have working capital, go back and forth and make it a great relationship there, and grow your business in some kind of a partnership with a company like you guys have. So.
Right. Yeah, and obviously what we offer is not a line of credit, but we have something that's pretty close, and we call it a hybrid line of credit. And it's a situation where you've given us your 3 months bank statements. We run it and we say, you're good to go for $75,000 comfortably to grow your business. But you come back and we've approved you for 150, right? We're not going to ask you to obviously take the whole, 150, but in the first half of the term, and I'll get into, if we have some time, what we're looking for from a parameter standpoint. But let's say you did a 12-month working capital loan, and you would take 75,000 now, and in the next 6 months you can go up to 150,000. So you could take it without any draw expenses at all. So it's just one way we can tailor it, along with prepayment ability, so that we can do the accounts receivable scenario that you were talking about, Jerry. Yeah. So it's very flexible, and on our side, I kind of think of myself as a consultant, so I would be asking some questions. How are you buying it? What's the reason? What's your payback? And so that you can make a really good informed decision without any, you have all the facts on the table, exactly what we can loan you, how it's going to be paid back, the terms, how much interest you're paying, so that you can make a good decision.
Well, I think that's the key thing, I think, though. And sorry, Jerry. I think that's the key thing, though, is that don't get to the point that you need it tomorrow and you got to start. You can still do that, but I think the conversation would be proactively reach out to you and say, Jeff, if I were to do this, what does that cost of that money look like? What does the process look like, so that you can build it into your pricing model? So I'm working on that $25,000 a month opportunity. I go to you, Jeff, and say, Jeff, I'm going to need 60 days to float me to get me past that hump. What is that money going to cost me?
Absolutely.
And that's the ROI you were talking about, to come back and say, make sure you factor this in, this additional cost of this money. Boom, you win the proposal. Boom, you've already been approved. Day one, you're ready to go, right?
Right. And as John alluded to on the equipment financing product, it's a very simple process. It's an application, 3 months bank statements, and for working capital, about 90% of the decision is based upon your cash flow. Okay,
Yeah.
as evidenced in your historical cash flow and your bank statements. So we know what's going in, what's going out, and how much we can loan you without stressing you and giving, and it's fast. So we can I funded a deal in 1 day, right? So it's normally going to be 2 to 3 days, but it's DocuSign as well. It's not like going to the bank having to show financials. This is completely based upon 3 months up to $250,000, which we call it app only, and sometimes even higher than that. So you don't have to go all that through the fun working with a bank these days. So
Let me ask you this, John and Jeff.
No,
Go, Jerry. Go ahead, Jerry. I'm sorry.
that's a great. So there's two things that pop in my mind. Number one, I wish you guys were around. You were around. I just didn't know about you. But when I was growing my company, because that would have been it's a perfect fit for startup to $2-3 million company. And a lot of times what happens is, in our industry, you get to 1.5 million and you can't get over the hurdle because of two reasons. You don't have the management team in place and you don't have the capital. And so this scenario is perfect for that kind of an organization. The second thing is, Jack and I face this all the time, is having contracts or signed proposals in place. If you have those, that makes that way better for your company, but also in this relationship, Jeff, with you guys, I'm sure you're like, hey, there's, I got a construction clean of $500,000 and they want me to start tomorrow and I need the funding to be able to pay my people every 2 weeks. That's a great piece of paper for both sides to have in play. And sometimes in our industry, we do a handshake and fail to have the paperwork in place and don't realize what impact that has on our organization. So yeah, this is great. It's a great opportunity for some smaller companies to grow. So
and one thing that you might not have thought of, it's not an either or.
yeah.
We bundle these deals. So if you need equipment and now you need people and you need supplies to put it, to deploy that, you can do a working capital loan side by side. Now, obviously, the equipment financing will probably be 36, 46, 48, 60 months, and the working capital, you're in and out. So it's going to be 6 to 18 months, normally 12 months. So, but it gets you going.
This, Jeff, John, too, both of you. John, I'll start with you, but I have heard rumblings from some of the contractors we're talking with that banks are getting more stringent with their loaning practices. Is that something? Is that fact? I know every bank's different, but what are you hearing out there in the market with banks?
Okay, well, on the equipment financing side, so here's what's great: commercial banks are tightening up, and that's tough for a lot of people out there. But the good news is most of the funding sources that we use are not commercial banks. So most commercial banks are going to put you through the ringer where, you got to provide financial statements and it's going to take them a while and it's got to go to an underwriting committee. With us, it's very much a credit decision. And, it's like, do you have, there's some cash flow in there, not as much of to the degree that Jeff needs it, but they're going to look at, are you paying your bills? And, do you have enough money coming through your account? Yes. And it's a quick decision. And we can do an application only financing agreement for up to $250,000. That is no financial statements. If the credit is good and they have the appropriate time in business, we can go up to $250,000 without any financial statements. So I think right now is a great time to look at financing equipment, because, where the bank's going to put you through the ringer and, do the water torture before they give you an answer. you're going to get a quick decision if you work with us.
And I can say on the working capital side, it is a big issue, right? These are our working capital is an unsecured loan, and banks don't like to do things that are unsecured. So, if you have ever gone to a bank to get a line of credit, they will, they have to do, it's almost surgery to get the thing done. And it's not the bank's fault; it's the regulators that are driving all this. So, if you need less than $250,000 for an unsecured loan, it's almost, they don't even want to touch it, is what I'm saying. It's so much work for them and you for a $100,000 working capital loan that they don't even want to entertain it. So if you need the money, this is a really good option for you. That's simple and it's fast. And as long as you're borrowing for the right reasons, it could be the best solution you can think of. And if you're looking at something for the wrong reasons, or if you don't have a specific project you're talking about and how you're going to deploy that those capital, we will let you know that, or at least kind of consult with you. So that might not be the best way to move forward, and we'll just be straight up for them, because that's how we treat our customers.
I agree with that. It's so true, because there's so many small companies out there who are trying hard to grow, and they're really go-getters, and they're having a tough time. And, and when we coach and go with cringe in our heart, we say, go to the bank and see what will happen. And if they're tightening down even more, I mean, good grief. I mean, it's like, I try to give up 2 of my kids for a $50,000,
right,
of equipment. Right. They wouldn't even take them. I mean, they're smart kids too. I didn't get it, but anyway, so.
Hey, Jerry, that brings up to something. If the audience was interested in, like, what do you need to look like from a revenue standpoint or whatever to get a working capital loan, and it's different for the equipment financing, but basically the minimum revenue monthly would be $20,000. So you don't have to be a huge company. Yeah. Time in business, most likely we need at least 2 years, because again, we're falling back just on historical cash flow. Sure. So minimum FICO scores are like 600. So it's not a huge border, target. And then minimum average daily balance is like 2,500. So you don't need to have, you don't have to be profitable, quite frankly, because we're not going to even be looking at that. We're just going to look at your cash flow. And just one other deal, and this is the same thing for equipment financing. If you want to consider an equipment financing or a working capital loan, we're going to do a soft credit pull. Okay, so there's absolutely no negative reason from your personal credit for you to explore that as an option, because it costs you nothing to apply. We're going to come back with an offer for your consideration. If it works, great. If not, you didn't, spend more than probably 10 or 15 minutes getting the information you need to come back with an offer.
Well, I think too, one of the interesting things that Jack and I are seeing, we're starting to work with more companies who are transitioning to the next generation, and the kids are coming in and wanting to push hard, and the mom and dad ran the business this way, and it covered everything, all the expenses, and they pretty much had a burn rate of breaking even every month, because they took care of the family. And now the kids are coming in, and they're really just like, they're ready to grow that thing to the roof. And so the company has the stability and the long-term presence to be able to grow. And we've seen great success. We've had a couple of customers that are like really becoming pretty big time in the industry. And this is another great fit for them. They don't have to toy with the bank, but they have great cash flow. They have plenty of history, and they're just trying to move it from one plateau to the next. So yeah, it's a good fit, man. So
yeah, I think this has been great. I think the takeaway here is, like anything in life, be proactive. I think John and Jeff, I think I would urge those listeners out there that are just maybe not ready, but are thinking that might be ready. I think it's worth a phone call to both these guys to talk about both IRS 179. Again, a little tighter window on that one, but the working capital as well. But be proactive and just do some what ifs. And again, I think at the end of the day, how you manage your people and how you manage your money is going to kind of put you to that next level. So as Jerry and I preach all the time. But John, Jeff, I'll start with you, Jeff. Any final words or comments before we wrap this thing up? And then I'll go over to you, John.
I know, just bouncing off of what you just said, there's no downside to get some terms for your consideration, because you'll learn about it's kind of back of the envelope simple, but just so you could really understand. And by having an offer in front of you, which obviously you're going to move forward if it makes sense, it's a lot easier to explain exactly what your terms are, how it's going to work, how you can prepay, and answer any questions you might have. So even if you just want to kick the tires and you're not ready yet, but you want to learn more about the product, just give us a call. We'll go through that, and then maybe 6 months later you go, I got it, and I'm going to pull the trigger, and now I know how to do that.
Great. Well said. Mr. John, we'll wrap it with you.
I was going to say something very similar. I mean, if anyone is interested and wants to just get an idea of, hey, what would the monthly payment be on something like this before I send bank statements and fill something out, I'm going to ask them a couple of questions about their business, and I can give them a ballpark number really quick to make sure that it makes sense for them, because we want to make it easy. And, there's also no hard sell here. We're not going to ask someone, what do we got to do to get them into the Buick cut list by the end of the day? I mean, that's not how we work. We're going to do everything we can to make the customer feel comfortable. And look, sometimes people just want to call and ask a quick question, and we never hear from them again, and that's okay. Just don't be shy about reaching out, because we are here to be a resource to your companies.
Yeah.
Love it.
Yeah. Awesome. Yeah. And make sure, and if you call these guys in the next 15 days, tell them you heard them on the Chasing Dirt show, and they're going to give you 0.00001% of a discount. So
Good deal.
we're YouTube stars, guys. You gotta get it out there, right? So.
You know what? If they call in the next 15 minutes, we will throw in a toaster oven.
Hey.
Nice.
Jeff, John, thank you very much. Dimension Funding. Again, reach out. I'll put in the show notes contact information for both John and Jeff. Jerry, good seeing you guys. John, Jeff, again, appreciate the opportunity. It's like four J's on this show, so it's a little difficult, but appreciate you guys coming on, and happy holidays to both of you, and we'll see you guys next show. So thank you.
Jack and Jerry, thank you so much.
Yeah.
Thank you, guys.
Happy holidays, guys. See ya.
Thanks.
All right, we're good.